Hello? Testing? Can the world hear us? It's like this. William says, "What's up, guys? What's up, William? Can we hear us? Are we good?"
Honey, can you hear us?
Na 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 na.
How was everyone's Halloween? Let's start there. Happy Halloween.
Yeah, Halloween, not Eve. That was Tuesday. No, that was Monday. Halloween,
Post Halloween.
post Halloween. Yeah,
Boxing Day.
there's no famous.
What's up, Aaron? What's up, Rohan? David? Spooky. Love to hear it. Hey, guys.
What was everyone for Halloween? Who went trick or treating? I'm a bit upset. I didn't get to go trick or treating, but I was Austin Powers for Halloween, so that was fun.
My girlfriend and I, we did go trick or treating. I was in some kind of vampire costume, and it was very weird. I don't think I've ever gone trick or treating past the age of 14. It was
Really?
I was just, it was Tuesday, and I was like, I looked out on my streets in New York, and there was all these kids and stuff running up and down the street. It was way different than Scottsdale.
Yeah.
And I walked up to someone to get a piece of candy, and I felt like a pedophile. I did not. It did not feel right.
At 29 years old, trick or treat.
They're like, it's for the kids.
Wait, yeah, it's like, that's a good point. I can't remember the last time I actually went trick or treating. Yeah, it's got to be at least high school at the latest, probably middle school. But we'll show the world what we're drinking. Usually we share it with everyone, but because we're actually together, we walked 3 blocks?
One report for me.
A little more. Huddy's already got his first glance down.
That's kind of what I do.
That's what he does. Say when?
Okay.
Oh,
Okay.
it's okay. All right. There we go.
Heavy pour.
We got a musket. Very nice, very cheap. Got a little citrus aftertaste. We love it. I like it.
Yeah, we kind of got bamboozled in a good way. I have this liquor store like 5 blocks down the street. Everything there is like $20 to $35, and it's all like craft wine from all over the United States. And there's always like a sommelier there and some kind of tasting. So today they had the musket for tasting. I don't think I've ever had a musket before. Muscat. And it's sweet and tangy.
I like it. It's good.
What's everyone else having?
William was Batman. That's a good
Okay.
one. Didn't dress up. I don't blame you. So everyone can hear us. People are slowly coming in. All right, cool. Well, for those who have been keeping along, me and Huddy have just been holding it down this week. Dom is deer hunting, so we did good on my NASDAQ today without him. But we got a lot of likes he'd be proud of. Did we even tell? I don't think we actually told him. I don't think he has any idea how many likes we got, but we'll sure send him a message. And then Jack is taking the week off, or at least after like Monday or Tuesday, he's taking the week off, which is also not a bad decision considering this week has been not that great. I think I'm down like 9K, so nothing to end the world, but 9K that doesn't necessarily need to be down. But here we are.
Yeah, Jack was out buying a boat today. I think he generally has like a temperature setting about, how well the market's acting, and pretty much what we've seen in the past 2 weeks and kind of the whole month is like there's not many actionable first red days. There's not many actionable breakouts. A lot of the breakouts are failing. A lot of the first red days have a lack of range or just a lack of frequency of actually showing up. So it's just not really a lot of market. It's a market where your margin of error is a lot thinner, where it's very likely that you're kind of maybe forcing a trade, or the trade itself is just not going to, go well in terms of the odds. So, when Jack's temperature setting goes off, he likes to kind of walk away from the market and distract himself until there's like a better, sentiment out there or reading, which you can only really get to with time. So yeah, we lost him for the week.
Yeah, he's gone.
Monday, he said, "F this."
We'll see him next week, probably. But what William says, do you want to go hunting? No, as much as I love animals and nature and seeing them, I like to see them alive. So yeah, no hunting for me. Although deer, I think don't they breed the deer specifically to be hunted? I don't know what deer he's going for.
I think the deer are like one of those things where it's like they need to be killed for the environment.
Really? So it's like a little equilibrium of hunter and hunting?
Something like that. I hope there's good cause. I mean, it sounds barbaric. We're both from California. Like, we didn't grow up with hunting season.
Yeah, we aren't technically country boys at heart. We're Dom and Jack are. It's kind of an interesting dynamic of us four.
It has nothing to do with vegetarian or veganism too. Like I eat meat.
Yeah, it's not. I don't do it for like the love of animals. I'm just like never. I don't think I've ever really hunted in my life.
And none of my friends are like, "Hey, Huddy, hunting trip this weekend? You want to go kill some deer?"
Yeah.
Like not like fishing. Okay, that happens.
I've gone fishing plenty of times.
That happens on the West Coast, but you just don't really hunt. It's all a new thing to me, and it's crazy how obsessed Dom is. But
yeah, Dom loves it.
I think as traders, you need passion, so it's good.
Fran says, "Cool shirt, Kyle. You guys." I think the coloring looks way better. Actually, no, it looks about the same. We have a merch store. For those who don't know, you guys who want a shirt can get a shirt. I would say I could post a link, but I don't think I actually can. But if you are in our free Discord, which is in the description to join our Discord, I believe there's a spot where we do mention our merch store, which you can grab. I think we sell a mug, we sell a hoodie, we sell a T-shirt, we sell. I believe we sell a mouse pad. We got the mouse pad here. Mouse pad. This is in black. I think we sell it in white, unfortunately now, but it's still very sick, very nice. I actually, obviously I'm biased because it's Clover trading, but I actually genuinely do enjoy this kind of very quality.
I use it.
Yeah, I literally use it every day. It's actually a good mouse pad. Just want to make sure we actually have the links still going. There. Clover Academy. Oh yeah, merch. Yeah, under announcements channel, the Merchy bot says, actually, let's see if I can copy. Let's actually see if I can send this link. I'm pretty sure YouTube doesn't let us send links, but let's try it. I think that link went through. Let me know if that link went through. I think it does, because it's me, the actual channel page sending it in. If not, it's in our Discord. But anyways, this is probably a good Q&A one. We did a great I would say we, but really Huddy pulled a masterclass on what he's been trading in Gap and Craps today in today's webinar. So for 4-leaf clovers in there, they probably know all about that.
It's always so awkward when I talk about stocks, like whether it's at the boot camps or like when I get really into it. It's like the brain just like wants to say everything I know about it in like as quick, like in a 45-minute period.
Oh yeah, there was a lot of information. I'm sure there are 4-leaf clovers who are going to watch that if they really want to get into it because there's a lot of info. Mason asks, are you guys trading LIAN for a first red day? I pulled it up here on my little phone.
I don't see a first red day.
Yeah, I see a very choppy. Oh, there we go. I see a very choppy pain in my arse to try to attempt to short this. Very choppy, gone red multiple days, and still grinds its way back. We are on a 1, 2, 3, 4, 5, 6, 7 green candles in a row, but some of them I think are technically have been. Actually, none of them actually have had red days. They've all closed green, even ever so slightly. But just because we call it the first red day doesn't necessarily we're actually looking for the first red day. Like the first red day, and we've had this with the first green day too. It doesn't mean we're actually looking for the first red or the first green day. We're looking for the day that it's really overdone and extended and has never gone red yet, or ideally never yet. And we're looking for that huge first day of selling off. And when you have a chart like this is just so choppy. It's gone red multiple times. It's clearly recovered. It's proven to recover. The likelihood of catching any kind of significant weakness or backside on this play is so much more unlikely than I don't know, like earlier this year it was like BBBY before it's not BBYQ is not even a stock anymore, but it was a great first red day. LHDX before they went bankrupt, it's a great first red day. Those are just two bankruptcy kind of examples. But ICCT was a great one 2 months ago. Themi was a good one earlier this month. Those are the good examples. And LIAN here, the run up is so choppy and so difficult that I think the odds of actually catching or being there for a backside move is super. I mean, let's put it this way. If I want to continue my losing streak for the last 2 weeks, I would try to short this tomorrow. If I want to give myself a good chance to lose money, this is where I'm going. Let's put it that way.
Yeah, I mean, it's missing quite a few criteria that we're generally looking for. I do think, like, I actually don't know at all, but, like, the main problem here for me is, like the whole first red day is you're trying to find this, like, predictable pullback on a clean trending stock, right? And this one specifically is super choppy, has support levels at almost every single level below 350 to 4, just from looking at the daily chart. But more specifically, like you want a clean runner, right? And like here we are 8 days into the run and the volume has completely dropped off. We're still holding levels. Like it just is a lot more complicated than what it should be. And I think long term, like LIAN, like these stocks that go on big runs that start getting illiquid and are choppy, they eventually come back down, but they're just really hard to time. And there's a lot of ways to lose. And so it's not really like a good scenario.
Right. I agree. Daria says the link works, and she uses the mouse pad too. Yeah, Daria's been at, I think, both our boot camps now. Traveled probably the longest travel to get there. Daria, she shared her story with us. She's committed to coming to in-person boot camps. We love her for it. She got a mouse pad. Those things are. I mean, again, I'm biased, but I actually do enjoy it. Let's see. Fran asked, "Are you guys finding that shorting is better in this type of market?" I think we're going to give slightly different answers, but I'll let you go first, Huddy, because I think our experiences are slightly different. But I think that's because of where we're picking our spots.
Yeah, shorting is such like a broad concept, right? There, just because you're a short seller doesn't mean two people are going to short the same things by any means. I find that in this market right now for the past month, and my stats support it, that my shorts have a high win rate. And when I am wrong, I'm finding ways to make those losses as minimal as possible. So I'm losing small, I'm winning often. And although some of the trades, none of them are like monumentally account building, it's been very consistent in terms of small losses and bigger gains, which is like generally where you're always trying to be with any strategy. Whereas the long side, it actually isn't that terrible for me, but it's like far and few between that I win on. So the win rate is in the gutter and there's a lot of losses and an occasional like really nice risk reward gain. I would say that like being a long bias trader right now is infinite sadness. It's infinite it's infinite depression. Like you're going to be, at least I lose on so many, and then eventually I get one that like makes me like just a bit even, a bit green, and like it's more just like waiting for like a better environment for it, which is not right now. And again, just my short line account, just losing small, winning bigger, and winning often is a lifetime of happiness, right? So I'm trying to stay away from the stuff that causes me sadness, causes me pain, and like sitting in a bunch of breakout stocks that don't go very far and I break even on a lot of them, or just kind of have these loss parameters that are just often. I don't like that, right? I don't want to keep putting myself in those positions to like waste my mental capital for things that aren't really producing fruit, right? Whereas like again, even if the short account isn't like growing exponentially, it is consistently winning, and when I'm losing, it's small, and like that is the most important thing to me right now. And so that's why I've been focusing so much more on my short selling. There really hasn't been a whole lot of long bias trades that I didn't like in the past month and a half.
No. Longing has been really tough.
I mean, there was a FEMI multi-day breakout. There was an ICU breakout, and like HUBC, I guess, wasn't great.
No, HUBC was brutal. HUBC only went, to 93 for off of 80? That's like, a 15% move, which technically, I guess you could have taken it and it would have been a decent win, but I don't know. That kind of daily chart was, for me, was screaming $1. So we never touched $1, so guess we didn't sell. This guy.
Yeah, I was up like what, $5-6 grand on it. Ended up making 400. Like it was pretty. Stupid.
Yeah, it ended up being bad. But we probably should have known it, given that like that's the market environment. Like I don't know. I got excited. Maybe I'm just too eager to finally get out of this hump that we are in of this very lullish long market and get to some good winners that can have some follow through and some momentum.
It's been a good mentality to be very specific. It's been a good market to be very specific of your intentions on exiting, right? Not just like holding and hoping for something that gets you violently green, but like taking these small base hits where it's like, okay, like if I'm risking X and I'm looking for 1 to 4, like, okay, and the chart kind of aligns with what I'm thinking, like, okay, I'm for sure selling there if we get, the right action. Instead of like, okay, now we're here, like how much further can it go? Oh crap, it's dipping, and now I'm like getting a worse, in terms of overall gain. Like I'm shooting myself in the foot. Like it's really important to be getting in and getting out and just moving on to the next setup because there's not a lot of continuation and there's not a lot of like extensions. So whether you're short or long, it's important to be aware of that.
Right. But ultimately, I guess to answer your question there, friend.
Testing?
Are we? Delayed?
I think your YouTube is playing or something.
This is playing.
William says, "What's up, guys? What's up, William?
What are we playing?
We good?"
Oh, I had my volume down. Weird. Interesting. Anyway, yeah. So the gapper strategy that Tidy's been working on has been paying really well. I have not been taking part in that, and so I've been trying other short setups that I typically trade. And the last 2 or 3 weeks, I have had a more difficult time. So there is always a period of both. No matter what setup you're trading, you're going to go through periods where there is a little bit of there's a lot of ups, but then there's going to be some downs. And so I'm kind of in that period where longing is not working very well. And this last specifically week and a half, shorting hasn't been, at least what I particularly trade short wise, which is not gap and caps. It's usually like first red days, overextended run ups, parabolic shorts. I haven't traded, partly because I haven't traded them well, and partly because they haven't really worked that well. So you combine the two, and you ultimately lead to a drawdown that I've slightly been in, small one nonetheless, but can't ignore the fact that I've been losing. So
yeah, and a lot of my short-sighted wins are not on my bread and butters. Like a lot of the first red day overextending cap down, overextending cap up stuff that hasn't been there. Like there's very few trades in my end of the month recap that are even first red day stuff. A lot of them are day one gappers. A lot of it is a couple parabolic shorts that I was successful on. And that's not usually what I'm trading, and so on one hand, that's like kind of optimistic because again, like having all of a sudden the best month I've had in quite some time on the short selling account, doing things that are not ordinary for me to be doing, but it seems to be the thing that's kind of working in this market at this moment in time. And the results look promising, and I'm happy with them. I'm happy with, again, small losses, bigger wins, just happy with that. And it's just weird, right? It's just a weird market where a lot of the first red day stuff that I normally am able to make, account moving type of stuff in trades in my account, that's not there right now, right? So definitely an interesting month, right? And different interesting market, and just kind of, I think the whole thing about adapt or perish, right? That's kind of what trading always is. There's always some kind of hot pattern that's working really well, and some years will be first red days, and the pandemic, it was breakouts, right? Like, I don't think I shorted many stocks during the pandemic, which is surprising, but like I was mainly buying breakouts like a madman.
Yeah.
And was able to make more money in those 2 years buying breakouts than I had the 4 years prior short selling first red days, right? Like that's how big of a shift it was in that market environment. And right now it seems to be not first red days or breakouts, it's other things. And that's just cycles, right? And, for newer traders, it's hard to trade everything. And sometimes there's markets where it's really important to be, preservation of capital and really know your statistics where, if you are a breakout buyer and you've done really well on it for like 6-8 months, and all of a sudden for the past 3, you're noticing that your profit or losses are not at all what they used to be. It's kind of time to check yourself. I'm not saying go find another strategy, but definitely be in a more preservation of capital mode if your stats are telling you to be on that setup.
Yep, I agree. Will asks, I know the market's weak right now, but besides that, do you think algos are playing a bigger or playing a big part in how patterns are working? I feel like as technology progresses, they will make it harder and harder. So there's like 2 questions in one here. And we've actually been getting the first half of the question. I think we got like 3 times today and yesterday. What the fact is that the market's slow. Everyone's questioning of like, are the algos in on it? Like, are they the ones making our patterns not work right now? Or is because everyone's trading one setup? Like, does that make it stop working? And honestly, I don't know the exact answer, but I would chalk it up to seasonality. Like, whether you know it or not, trading can be and is largely a seasonality game. Yes, it's year round, but it's very similar to like a Macy's, right? Like Macy's gonna sell their stores all year long or sell products all year long, but when holiday season comes around for Christmas, they're going to sell the most they ever have in the year. Now, granted, trading isn't like that in terms of November, December. It's really like January, February, March, in my opinion, at least in my personal experience. I've seen that be a lot of other traders' experiences. And it doesn't mean we can't make money. I mean, again, as much as I'm complaining about, I had a drawdown, it's tough. The reality is I still made $30,000 in October. So, like, we're still making money. Now, is it as much as is it as efficient of money or easy flowing of money as it was in February or March or January for me? No, like totally night and day. But I'm still making money nonetheless. And so right now, whether you call it algos, call it everyone's on the same side, we're just in one of these slower, tougher periods in general. In terms of the other flip side of that question, and I guess I'll let you add to this, Huddy, if you have anything to say before I go to algos. But the algo, whether algos get better or not, I think that's a whole other speculation that I don't really have a true answer for.
And ChatGPT might even change the landscape of these algos. But in my opinion, like there's two ways to think about algos. Like on one hand, you can completely overthink them, and on the other hand, you can completely ignore them. But the fact is I think that algos are present in almost every single play that has volume or liquidity. I think there's someone running some kind of algo across the world. Like they're going to be somewhere baked into the price action. And I think the most important thing is to understand what the algos are and are not capable of. Because algos, it's not like something you can just like turn on and it's an infinite money printing press. Like there's reasons that someone would turn on an algo. There's reasons as to why they turn off the algo or what they're doing behind the scenes while the algo is running. And it's just really about like understanding that they're there and like, again, like what is capable and what is not capable for them to do. And it's hard to say across the gambit of everything because every single one's kind of is independent of each other. But again, like there are certain things that like an algo can't just spike a stock 1,000% in a day. Like that'd be very hard for it, unless the stock was trading like zero volume with some liquid trash.
Yeah, and they were the whole thing,
and which is illegal, right? Like they get caught immediately. So
that's called market manipulation, everybody.
Yeah, you need to have players, you need to have some kind of liquidity, and so like they're always there. They're always trying to manipulate. There are companies that are doing hours and hours and hours of research on psychology of all market participants to know the exact time of day that you get exhausted so that their algo turns on to squeeze us. Like that stuff is always going on. And then it goes even further. Like those are those players. And there's people like behind the stock or the lenders or the insiders that have the shares that want to pump the stock up to sell stock. So you have to imagine that there's a lot of algos going on, but like there are still things that the algos are capable of and there are things that they're not capable of, right? Like in a lot of senses, like, on a first red day after like let's say you have a stock that parabolics from like 1 to 9 in 3 days and it's trading like 50, 100 million shares in that kind of sequence. Like it's going to be very hard for whatever algo on day 3 with that kind of extension you can't just like turn it on and expect the stock to go another 50%. Like it's going to be increasingly cost more money. There's going to be less players from the outside world, like retail, that are willing to buy it. So it's like, again, what are algos capable of and what are they not capable of, right? That's how I think of it.
Yeah, I think there's this overwhelming fear of algos in general. The sentiment I get when people talk about them, and it's warranted. I'm not saying don't fear algos. Like sure, like they're going to be quicker than almost any human being out there, but they're not foolproof, right? Algos still lose. There's no 100% win rate algo out there that at least I've seen people create. And on top of that, sometimes the algos actually help us. Like when we were briefly talking about market manipulation. Like we can't ever prove it, but like, and we can never like prove like, okay, this is the algo doing this to that stock. But there's like dozens of, if not hundreds of examples I've seen throughout my career where a stock is specifically targeting or going to a certain price for a certain outcome. Like there's an underlying reason why this happens. And again, there's always been a perfect example is the speculation whenever. This usually happen all the time in like 2017, 18, and 19, where, and even I think it happened like earlier this month, I believe. If a company puts out a PR that says, "Hey, we might get delisted if we don't keep our $1 bid requirement," like because again, if you're on the Nasdaq, you have to be above $1 for a certain period of time to remain compliant. And if you're under $1 for I think like 6 months or something, the Nasdaq kind of gives you a little letter of warning, like, "Hey, you've got X amount of time left."
LAFW, by the way.
Yeah, LAFW had to do a split because of it. They say, hey, you got to get above $1 or you're going to get delisted to the OTC exchange. And for whatever reason, a lot of these, especially in the past, would immediately spike to $1, if not close to it, to try to regain that $1 bid minimum. And I just could never, me and a lot of traders that would talk about it, could never get around the mentality of like, there can't be that many retail people buying it solely because the NASDAQ tells them to. It has to like, there's got to be more reason as to why it's in there. And so a lot of suspicion is like, there's always like this firm or this algo that is willing to kind of step in and be like, yep, here's another one. Like, let's bring it up to $1. Or there's like, perfect example was TPST, right? They needed to have a certain price what was it?
Yeah.
TPST needed to go to a certain price to be able to do their entire ATM offering, and what do you know? They got it right to that price, being up 4,000%. Right? You can call it coincidence, and maybe sometimes it is, but sometimes there's like agendas and context and scenarios that happen and play out that it's like someone was behind that and they nailed it, right?
Yeah. And TPST was a great in my opinion, was a great algo to kind of know what they were capable of doing, right? Like that algo was really in play on the stocks that could limit up or limit down, and it seemed like that algo was just, whether it was TPST or SECO OPGN and the numbers that followed, but TPST was the most like violent one, where it was like once they understood the halt bands and where shorts were and how to play with those halt bands, they were just abusing the halt bands with very little money to squeeze the stock for as long as they could, knowing exactly how these halt bands worked. And like that's just a new type of algo that we saw in the past month in October. Maybe it's not new, but we saw it frequently in October, where there was just like this algo that was always on abusing halt bands as much as it could from these stocks that were gapping up from the lows. For what purpose or who's activating them or how, I don't know, but it's not necessarily just retail that's like squeezing themselves like over and over and over for 20 million times a day. Like eventually they give up.
Right. Rohan says, video quality is great today. Yep, that's because we're not on Zoom. Since me and Heidi are in person, we have linked the lovely camera here straight to the live stream instead of through Zoom. So a little treat for you guys. Brian asked, did you guys take IBRX on a Monday for first red day? I think you mean
Tuesday.
I think you mean a Tuesday, because I am looking at the chart here, and it tried today and it tried yesterday. Tuesday. And both times they have succeeded in holding it green. For those who, let's show the little chart here.
Yeah, and honestly, like I've had this for years in my.
It's still blurry. Come on, you got this. You can do it. I'm just stubborn. I'm like, we're gonna get it. Even though you know what it looks like. Anyway, continue on.
So this is exactly what I'm talking about, where it's like forcing trades. And I was saying on Good Morning NASDAQ this morning. In these types of markets where ideal constructs of chart patterns aren't really showing themselves, I think our brain immediately goes to trying to force ideas or force trades in order to either make back recently lost money or just get a win, just get those dopamine feelings, which happens to everyone if you're not alone. And like one of my mistakes, like again, like I think it's really important to know who you are as a trader, what's your niche, what's the criteria, what's the price points, all that stuff are really important. And I find that whenever it comes to first red days on extended stocks that are clean runners, like IBRX was, granted, if they're ever in that like billion plus market cap area, I find them really hard to trade. I started to notice this way back when on NIO. When NIO was this like electric vehicle company that was like going parabolic into like the 40s from like a $5 area. And it was like this huge electric vehicle company. And like for the life of me, I couldn't find $2 a share on a stock that like should have tanked like $6, $7, $8 in a day. And then there was another one, SPCE, Space. And I remember getting absolutely chopped up on Virgin Galactic. What's Virgin Galactic, right?
Yeah.
Like I had a spike from like, I don't know, 15 to 40. And it's during the pandemic. And I got absolutely chopped up. And that one too, into the 40s. And they still worked. Like, had I given it, maybe some puts would have been a better option. Like, giving it just like more of a time frame. Plug was another one. I just found throughout my whole career, like when I go after first red day stuff on multi-billion-dollar companies, like I get chopped up. They don't really just react to the patterns the same way that like small cap and specifically retail within small cap acts in those panic situations. I also think that there are different players involved when you get to multi-billion-dollar companies. I mean, just think about hedge funds, think about algos. Like there are certain regulations behind hedge funds that allow them to trade certain price stocks, certain market caps, and there are some things that are just deemed too risky for big money to even be messing with in the first place. And so I want to be where big money isn't, because I do believe that big money does mess with the patterns a bit, because they have hours of research. Like if you think that I know more than some research fund that has billions of dollars at their hands to research on how to make money from me, like I'm losing that battle every time. It's a fact. So I always say to myself, like one of my mistakes in my trading journal is do not trade multi-billion-dollar market caps. Like, I just don't have edge there. And IBRX is one of those that has a multi-billion-dollar market cap, and it's strange for a $3 stock to have a multi-billion-dollar market cap in the first. You usually don't see that. And that's part of the reason why I overlooked it. I just said, you know what, screw it. Like, the chart pattern looks great. I'm going to take the trade. And here I am with a loss and a 1 hour loss. Like, whatever, I'll move on to the next. But in my trading journal, it goes down as a mistake because that's one of my very few mistakes that I can make. Like, is don't trade a multi-billion-dollar company. It's very straightforward. And so happy to have stopped trading it once I kind of realized, like, okay, if there's anything I can kind of point to why this didn't work, that's where my eyes go. And just move on to the next. But yeah, definitely did take a shot at it.
Yeah, I did too. I took a loss. This is very similar to LIAN. Same kind of idea where I will say IBRX did look better. It did have a much more smoother kind of run-up than LIAN did. But specifically yesterday and today, it's giving off the same characteristics of this. It's red, so you should short. Oh, goes back green, you get squeezed. Oh, it's kind of topping out at green. Let's short it. Oh, it goes back red for a little bit, and what do you know? Oh, it closes red or green again. Like it's not the traditional natural sell-off that you get from a really good red day backside move. And again, eventually, at some point, LIAN and IBRX will have a quote-unquote official red day. But does that mean they're down 1%, 10%, 3%? Like, I have no idea. And so when they get so choppy for me, I've kind of given up on them. And IBRX is at that point now where even if it did go red, I really have no FOMO at this point. It's just proven that it has the characteristics of something I don't want to trade. And again, same thing for LIAN. If I want to continue my losing streak or my downtrend, I would go into tomorrow looking to short IBRX. That's just my opinion. That's just my personal experience with the stock. So therefore, I am not going to be looking to really trade it any longer. So yeah. And there's a few questions about IBRX. I'm glad we went over that one because a lot of people are curious about it. Because again, and this is why I think that's the case, because it did look so good. Right, like from what last week into Monday to this week, it had 3 beautiful green days up in a row and never had gone red. Like it had a lot of potential. The problem is what it sets up to be and then how it actually plays out are two different things. And that's why we have risk. That's why we have a trade plan because you just never know, right? We can only predict so much before what actually happens gives us the actual outcome. So yeah, it happens. And Will says PYXS was a great first red day in April. Will, you had to bring up one of the best red days that I didn't ever trade, and I screwed up and I didn't take it. And whenever I remember this ticker, I get frustrated because
it was so good.
It was so good. I don't know why I didn't take it.
I covered that one way too early.
This was amazing, and I, for whatever reason, like right when it went red, I was like, yeah, no, I'm not going to take it. And then I don't know why. It was like my brain, I had a huge brain fart. For those who know what we're talking about here, like absolutely beautiful. Like this is like A+. And for whatever reason, my brain just lost brain cells that day. I just didn't have it. I don't know what it was. But yeah, that was a great, great red day. Anyway, let's see. Kevin asks, Kyle, how do you know when a Chinese liquidation play is going to dump? Gosh, Kevin. If you know, you can tell me, because the longer I try to play them, the more I realize I sometimes have no idea when they're actually going to liquidate and dump. It used to be very straightforward and easy, not easy, but straightforward in 2021, 2022. But once this year started, it got increasingly more difficult to the point where everything I thought I knew kind of went out the door to some degree. And what I mean by that is like, at first it was like, once any type of huge harsh selling came in a volume, like, oh, that was the dump starting. Nowadays, it's like that could totally be wash sell volume and totally fake. We look at, oh yeah, totally fake, and it turned out to be fake. Like TOP was one of the bigger losses I took this year, and many other traders took very big losses on TOP this year because they just totally caught and absorbed all these short sellers from anywhere from like $7 to $20. And then in after hours, it took it from 20 to 110 or not 110, like 180, something insane.
200 some.
Yeah. So like the squeezes from them have turned so ugly. to where it really scares me and many other people away from them. Now, granted, have I stopped fully trading them completely? No, I have still given some a try, unfortunately, and some still do work. But it's certainly the edges dwindled to a point where I've drastically sized down on them, and then even then, like I said, to answer the first thing I said to your question is like, if you know how, if you figured out how to tell them, like, please let me know, because at this point I'm kind of a little bit up in the air as to when and how they really do when they decide to. And frankly, there hasn't been a good one that has happened in probably at least a couple of months, if not a few. So I can't really say it's really a frequent thing happening right now.
All I know is that if there's, I don't know much, and I don't trade them anymore because it's whack. But
there you go. How do you have the discipline to quit and stop?
But what I've seen is it's like bad heroin. It's not even good heroin. It's like really bad. It's like you're doing it and you just because you like pain. Yeah. I don't get it. At one point it was good. It was like good. I'm gonna stop with the heroin, but it was good at one point and then it got really bad. There are ones that do sell off on very heavy volume that like cannot even break the minute bar candle previously that it made. So like in those circumstances when they're down 50% and there's just heavy volume and heavy selling, like those are the ones that have a harder time squeezing back than the ones that dump on like, let's say like 600K volume and then they go immediately a liquid and just start trading sideways. Like those come back a lot more often and a lot scarier. Either way, still bad heroin. Like, doesn't matter if they're selling or not. Like, I think it's a really hard strategy to be successful on because it's like, just the mentality behind them. It's like you just want, again, like first trade days are nice because you look for a pullback. And when you get a pullback, you cover. But like when you're in a liquidation play, you want death. You want destruction. You want zero, you know? Mm-hmm. So it's like your mentality immediately goes like, if they're selling, I'm selling too, and I ain't covering until they're done selling, which is not today. And it just puts you in such a bad risk-reward position if they decide to flip the script, which is what they did in 2023. They said, you know what, we're just going to squeeze everyone because everyone's shorting and we're not making enough money, so screw them. We're going to make them short and then squeeze them out and then start selling it. So it just became this terrible cycle. And
you want to talk about, to combine two questions, you want to talk about algos getting good. I don't know if it's an algo, I don't know if it's whoever's behind these plays. Whoever runs them, I genuinely want to meet them and just shake their hand because like they're good. To the point where again they make you question like, do I even know what's going on?
But again, like if you've ever watched the Muddy Waters research documentary, the China Hustle, on Amazon or Netflix, great movie, China Hustle documentary. I fell asleep within an hour, but I hear it's great. It's like a 3-hour documentary on like stocks. Like, oh my god, do not make me watch that. Yeah. But I tried. And the reality is like, again, like I said, like they are pulling like billions of dollars of liquidity out of the U.S. markets, right? And it comes back down to the fact of like algos, right? It's like, do I want to compete with someone that has billions of dollars to research every single psychological pain point that I have and then flip it and make it exacerbated? Like that's who you're competing against. And for a while, like there was edge. And then they said, screw you guys, we're going to ruin it. And they did because they have the research and capabilities to figure it out, right? They're not. It's not just some like foreign dude in like a small little shoebox apartment who's just like, you know, clicking a button and saying, ha ha, you know, like it's not the same as retail. It's a much more mathematical thing that's going on somewhere out there with billions of dollars of research. So, you know, it's not small. The whole operation is not small. That's what I'm trying to say.
There you have it. Fran asks, what advice can you guys give someone who's not short of stock yet? My husband seems to think I will lose the house by shorting.
I don't want to give advice.
Yeah, it's not really advice.
Let's just preface it that way.
Right. There's no advice we can give. We're not financial advisors. What we can do is maybe educate on misconceptions of shorting, which, you know, if your husband was on stream, I would say, yes, shorting can be dangerous, but there is a misconception to it is and how much it can be. And it really comes down to how disciplined and how safe your trading is in general. Because let's put it this way, and then this is where the misconception gets behind people, is like they think shorting is something you can lose infinite amount on, which theoretically is possible, right? But then no one seems to talk about the fact that if you just leveraged long, you could theoretically do the same thing. Right? Yes, if you just long something with no leverage, sure, the max you can lose 100%. But the moment you add margin or leverage to the equation for either short or long, you put yourself in a position to be very risky for either side, for just trading in general, right? So what it comes down to, whether you're long or short, and again, this is how I view it. This is how I feel safe, short, not feel safe, but I understand and am okay shorting stocks, is because it doesn't matter whether I'm long or short. The reality is I have risk management in place, and I will do everything in my power to stick to that risk management to keep my losses small, period. Well, I don't care if it's a long or short. They're both in the same. Like, I treat them both equally, right? Because the moment you don't, that's when losses come. Whether they're infinite or whether they're above or below 100% mark. The reality is they're still losses, and they're not maintained, right? They're not being risked and managed correctly. So
yeah, and then let's go further. Like, let's talk about the scariest moments as a short seller or a long biased trader. You swing overnight. It's probably a scary moment, right? If you're short, you're short a beverage company overnight. Coca-Cola comes in, buys out the company. It's the new brand of Coca-Cola. Stock gaps up 5,000%, right? You lose everything, right? That's a really bad scenario. And that, in theory, can happen, right? So you're trying to avoid unnecessary risk and just be aware that, like, that is the scariest thing about being a short seller. If the complete 0.001% chance that you're in the company that Coca-Cola bought out that night and you're short a considerable position and it gaps up, not even a considerable position, but it gaps up 5,000%, you're going to owe your broker money. Like, that is a fact. That's the scariest thing as a short seller. The scariest thing as a long bias trader, you bought a low float, good pattern, yada, yada, and two things can happen. It's a biotech, phase results, down 90% over in a split second, or offering down 20 to 40%, just like that as well. The offering and the failed biotech is way more probable than the Coca-Cola buying out your company. Like, those are more probable. Those are things that occur more often, right? So there's risk. What I'm trying to say is that there is risk either way, and like, kind of the best thing to do is like be aware of the things you can control, the things that you can't control. For instance, in both circumstances, you don't have to swing a stock overnight. And a lot of times, offerings, phase result news on biotech, or some kind of after hours weird PR where you don't have a stop loss in and it doesn't get triggered, whatever it is. A lot of that stuff can happen in the after hours. So, like, the first thing to being kind of like a safer trader, whether long or short, is to try to avoid after hours, try to avoid things you can or cannot control, like unexpected news that could hit a stock that you don't know too much information about, the behind the scenes nature of it. You can avoid the scarier moments in those circumstances. And again, they exist on both sides. It's just, when you're short and like the worst of the worst of the worst case happens, like, the punishment's huge if you can't get out. Even long some stocks, you could have T12 halts, you could have, a tons of different types of halts. That bankruptcy news, we've seen that a number of times this year. Hopefully no one was in WeWork the other day. Bankruptcy news, that's bad to be in. So that's number one. Number two, like, control it. Number one is control the things you can control and try to avoid the things that you can't control. Don't put yourself in situations that you can't control the outcome. Again, this has to be very generic. And then number two is like, just like with buying stocks, if you're short selling stocks, like, go in with a very detailed plan. What's the setup? What's the trigger? What's the risk? What's the time frame that I'm going to be in the stock? Is it intraday or is it multi-week, multi-day faceted? Whatever it is, like, create your own trade plan, right? And through those, like, methods, like, for the most part, both sides of the trades, whether long or short, like, you should be able, for like 90% of the time, be able to control the things that happen, like you would any other trade. That's just a good outline, right?
Yeah, that's a good outline.
The last thing I would say is, like, for me, and whatever happens to me is not an exact science. It's not guaranteed it's going to work for you, et cetera, all the disclaimers in the world. But for me, I would not be a profitable trader had I not started short selling at one point in my career. Had I continued to buy stocks since day one, like, I was losing doing that. And so it kind of took me short selling and, like, at least willing to do it in a very safe way to understand both sides of the equation, longs versus shorts. Where are shorts position themselves? Where are longs position themselves? Where's retail positioned? And in order to understand the emotions and psychology of both sides of the trade, for me, I had to be in both sides of the trade. So I had to, like, understand the market, and it was market research. And, like, hopefully, if someone was ever to do market research, like, you don't blow up your account trying to do that, and you do it within a very safe, confined way. But it's just an important side of the equation to understand. It doesn't mean that you have to necessarily short sell, but you do have to understand at some point what short selling is, because there's two parts that make up the market. It takes two to salsa. And however you want to go about doing that, I can't give you advice. I can't cross that line.
The only last thing I'll say is that, the attitude that losing shorting is infinite, which it is true. But there's also there's like a sidecar to this vehicle that people will say, like, again, that's the given aspect that you are ignoring all risk parameters and you are going into things with things you can control. Like, perfect example is how you said, like, if you're trading after hours, you take a bit of risk. If you take something right, you take that extra side of risk. If you're trading just intraday, then that saves you a lot of that risk. Granted, there are still volatility halts. There are times where stocks can gap up and down for volatility to make it tough, etc. But in general, across most scenarios, again, not all, someone who is short and has been like, oh my gosh, I lost 400%, like, shorting's so risky. And it was all intraday. Shorting's not risky, you're risky. You let a stock go against you 400% over the course of 3 or 4 hours, and you just watched it, right? Now, granted, there are some scenarios where, again, a gap could be scary, there could be news. Given the very minute black swan events, they do happen, which is, again, for both sides. But there's always, they bring people think of the saying like, I got caught. It's like, if it was over multiple hours, like, you didn't get caught. You got stubborn is what you got.
And I will say, like, there's only been one trade in my career where I straight up got caught. Like, they caught me.
Yeah.
I lag. And again, like, there are things you can control and there are things you can avoid. iLag was one of those situations. So was TOP, where, again, you had to have kind of poor risk management. You had to, like, not be willing to cut the loss. And once it blew past your risk parameters, you had to still sit there and not cut the loss and I'll just kind of F around and find out kind of mentality of how high is this really going to go. Like, I'll be honest, I had every moment in the world to cut into a 20%, 30%, 50%, 60% loss. Instead, I said this has to stop and let's see when it stops. And again, so more on to Kyle's point, like, it's all about your own personal discipline at the end of the day. But even the ones that didn't take 3 or 4 hours to go 400%, the reason I bring up iLag is because it was maybe 15 minutes of actual trading time that spiked it 400%.
Yeah, it was quick.
And again, even in that circumstance, I chose not to cut. It wasn't like I was trying to cut as it was spiking 400%. So that's number one. And number two, like, what are the characteristics about iLag? What are the characteristics about top that are similar? And how can I avoid even being in those specific genre of stocks in the first place? Because obviously the ones that have done the most amount of damage to short sellers, HKD, ATXG, iLag, top, etc., those are probably the four, they all have one thing in common, that they are these Chinese IPO liquidation plays with extremely low floats. So the 4 most dangerous situations I've seen in the past 3 years as a short seller, like, I can avoid all of those and still do business as usual and not put myself in those situations to even have to trade the ones that do the crazy things that, like, if you don't react to, you can, like, those can go crazy. Right. Those can literally go crazy. I mean, HKIT kind of did it at some points. And so, again, it all kind of comes back to the discipline of the trader. Like, yes, they can go crazy. You could still cut them, but it's a lot more violent and it's a lot more quick. And you don't have to trade those. And they're obvious to say that those 4 stocks differ from the rest of the millions of stocks out there for these, 5 blatant reasons.
Right.
So, like, my only, again, I can't give advice, but I will never trade one of those again. I will, like, I stay away from those and I can identify them. It's not like, it's like, oh, that one caught me by surprise. Like, I never saw that coming. Like, I didn't know that stock had it in it.
Yeah, you saw it. Yeah, like, you knew deep down.
I know what these stocks are capable of. And I still put myself in those positions, and then I still don't react to risk levels. And then I'm in a bad situation where I lose 40 grand in an hour.
Right.
But I can avoid that.
Right. Parker, what's up?
Should we do this one?
Up to you.
I was going to say it.
All right, that's fine.
Wayne B, just kind of, look, this Wine Wednesday, we're winding down. We're just here for the tea. He said I got banned from rolling today. Kind of pissed me off. LOL. If you want to write in the chat, if you want to talk about it, we'll talk about it, maybe. But if you want to share your story, I'd love to hear the story. I'm genuinely curious as to what you did to get banned. and we'll see if it has some validity. We'll give you our opinion on it. See if you deserved it or not. I love Roland, so
Yeah, how do you not live with them, but
I used to say that. I lived with Roland. I pretty much did. He's my brother.
Yeah.
But I can be impartial. Do you guys, Parker Gatlin, I know Parker Gatlin's been around for a while. Do you guys think this market will get any better anytime soon? It's been 2 years of slow BS action. And you know what? You're absolutely right. It's been 2 years of very slow BS action ever since March 2021. In my opinion. Again, there are traders that are absolutely killing it in this market circumstance. And probably relative to what they did in 2020 and 2021, they're not doing as well. But, Jack Kellogg is a great example of this, where he's still making multi-million-dollar years without the pandemic, even this year. I think he's at like 1.8 or 1.7 for the year, something.
Yeah, somewhere in there. Yeah.
So it's really, I think there are going to be, do you think this market will get better anytime soon? I don't know about soon. I think there are better years to come. I think there are easier years to come. But part of being a trader is learning how to thrive in the arduous times and adapt or perish type mentality, right? Or like maybe, again, like in the back of my mind, we had like, I don't know how long the bull run is. I kind of lost track at year 7. But I remember like at year 7, which might have been 2018, it was the longest bull run market times like 2 or times 1.5 at that point. And then we went another 4 years without a recession or like maybe there was a quarter, but not like a full year of declining price action. And then we finally got one in 2022. And so given that was the longest span of bull market, like by times 2, like the longest bull market before that was like 4 or 5 years. And then we went like 8 or 9 or 10. I don't know the ending number. I kind of think like yin and yang, like you're going to have a bull market or a bear market that might be the longest bear market that we've seen in a long period of time, just to kind of, come back to the median. And if that's the fact, then like maybe 2 more years, right? Of just like really tough continuation type patterns. But again, there have been spurts of opportunity.
There we go. Yeah, and I agree with what he's saying, but I also slightly disagree in the sense that it really depends on, I think, what you're specifically trading. Because yes, I do know what you mean, Parker, in terms of the last 2 years have been a tougher 2 years. But I think also that's because we just came off an incredibly spoiled period of getting arguably the 2 best years ever. So it's natural we're going to have that ebb and flow. But even within these 2 difficult years, we have had, and how do you mentioned at the end there, we have had spurts of good trading, right? Doesn't mean it was lasted long, right? But there were some good periods where it's like any trader who came prepared definitely could have made, their yearly's worth of money in that 1 month or 2 week period, right? Again, not everyone's gonna do it, and again, it depends on what you're trading. Like, if you're a solo OTC trader, OTC trader, right? You've had a very difficult 2 years. I don't know how and if you've ever made money from OTCs because they've just been that tough. So it's a lot of different factors, but yes, and ultimately same kind of conclusions. I do think there are better years to come. I think after such great years of 2020, 2021, choppier, rougher years of 2022, 2023, eventually we're going to kind of try to find this equilibrium, and hopefully it turns into this upward steadiness of opportunity, right? Nothing as crazy as the COVID market that we saw, but certainly maybe not as tough and choppy as the last 2 years that we've seen. So
I like this question.
We have 5 minutes here, or we're coming to 5 minutes there, so let's maybe speed round these, or again, if there's a good answer to give, then we'll have to go over. Yeah, that's a good question. Go ahead. Yeah.
So how did you guys focus on learning trading while in college? I'm currently trying my best to balance my attention between exams and trading. So I can give educational advice, right?
Yeah, then we both did learn how to trade in college, so it's really our experience.
Here's what I would do, and it might sound like a joke, but I think this is the best way to learn in college. First and foremost, transfer to a college on the West Coast. Okay? That's like, again, we're both West Coast traders, and we traded in college part-time. Number 2, you can't trade while you're in class, which is why number 1 is number 1. You can't trade while you're in class. If you're in class and you're listening to the lecture and there's also a trade going on, 1,000% you're not hearing the lecture. You're going to be trading. Like, I know this because I've done it a lot. So here's what you got to do. You got to transfer to a college on the West Coast. Honestly, Mountain Standard Time can also work. And you have to schedule your classes around the right times of day. For instance, for me, right? I woke up at 6 a.m. because I'm in California, so market opens at 6:30. I'd wake up like 5:30 to 6. I would trade from 6:30 to 8. I found a pattern that worked for me in that hour and a half. For me, it was first red days. That's what worked. I'd make my money on the predictable pull that I got. And at 8 o'clock, it was time to shut down the laptops. It was time to exit all positions. There was no carrying a position forward. It was literally like, this is your hour and a half to make money. And if you can't do it, then that's it. At 8:30, kind of 8 to 8:30, wrap up all my stuff, head to class. And my classes were scheduled. I have one class from 8 to 10. There was like an hour break right there, hour and a half. I'd either hit the gym. I think I hit the gym most mornings, but there was an hour and a half break. And then I'd have another class like 12 to 2. And I think on some days it was 2 to 4. So like on some days of the week, I got to see market close. On other days of the week, I didn't. But I always tried to schedule my classes. This was the basics of it. 8 to 10 was a class, and then 2 to 4 was a class. So I could trade the open and I could trade the afternoon. Or I could watch the afternoon and I could trade the open, which is majority of what I was doing was watching the afternoon, making a watch list, and trading the morning. And my classes would be during mid-morning and after hours. And by doing that, I was able to make money in the morning, go to class, hit the gym, watch the close, hit the next class, do homework by 4 o'clock, lacrosse practice by 5:30, 6:30, homework, library till 8, and then it was sleep.
Do it all over again.
And I was in a groove doing that. Like that was like money every day. Like I felt on top of the world, make $1,000, hit the gym by 10 a.m. and my drunk friends were still asleep, and like I was up $1,000 with the gym in my pocket. Like I was like, like awake and aware in class, and you can't trade in class, unfortunately. Like I know it's tempting. Like I know it is. I know it's tempting to go from class to class with a stop loss. I've done that too. Those were always my losses. And I was like, okay, stop loss. Let's go to the next class. 15 minutes of no watching. Always lost $1,000. Yeah, every time.
Yeah, I agree with that. West Coast was definitely easier for me because I wasn't as my schedule was a little bit different than Huddy. I purposely actually didn't even book a class until the market closed. So like the market closes on the West Coast at 1 p.m. I scheduled my classes for 2 p.m. or later, and I was on campus till like 7 or 9 p.m. at night. So like I was a total second half of the day kind of student. Yes, sometimes there were classes where I had to take them midday. So yeah, I would take them. And again, midday for West Coast is like 9 to 11 a.m.-ish, 8 to 11 a.m.-ish. So sometimes there were classes where I'd take it at 9 a.m. or 10 a.m., etc. But yeah, same thing. I also tried to avoid trading while in class. I guess it's technically, I'm trying to envision if I was on the West Coast or the East Coast, it technically probably is doable. You probably, again, the first hour and last hour is the most important in my opinion, or hour and a half roughly. So like, considering the market doesn't open on the West Coast or East Coast until 9:30, there's probably an early morning class that could be taken, call it like 7 a.m., 8 a.m., be done by 9, and then immediately go to the library or whatever you got to do to then trade.
No, I missed the days of trading in the undercalf.
What's up?
We had an undercalf, which is where like everyone ate. And
so you just went right there?
Yeah, I would be there at 6 a.m. sometimes.
Right. So you could do that, and then a class midday, and then market closes at 4, and you do another class or two at 5 p.m. and 6 p.m., right? Or 7 p.m., whatever it is. That's really the gist. Juggling those, and also on top of that, I mean, again, this is not advice. This was my own personal experience. Once I found trading, for me, it ceased to get degrees really became the motto. That's not true for everybody, right? Education is important, getting degrees is important in many ways, but like for me, it quickly became like I am going to do the bare minimum to pass, and then every and all extra time that I have is for trading. Again, that's not going to work for everybody, but it did, again, in my own personal experience, it did for me. But yeah, that's kind of how I handled it all. So
I was kind of thinking while I was doing it, I was like, there's a world where all this is BS and I'm going to lose all my money and I have to take class seriously. I had a 3.8 GPA, which is good. I like aced everything. But I took it super seriously because I was so scared that day trading wouldn't work out and then become an investment banker. And I was like, okay, I need my degree of finance and economics. But I'll tell you what, like, some of my fondest memories were trading in college and just being in the undercalf, running my statistics, trying to find edge in all these stocks, trying to find a pattern. And all my friends would kind of come down and like say what's up to me. And I'd always be there, unprofitably or whatever it was. And they'd be like, "What are you doing, Huddy?" And I go, "I have no clue what I'm freaking. This is like year one. I'm like, I have no idea what I'm doing, but I think there's big money here and I'm going to find it." And they're like, "All right, good luck." And no one sat down with me to try. I remember that.
Don't forget. All right, let's do like one more question here. If we don't get to your question, feel free to ask it in next Wednesday or in the Discord if you're in there. We'll probably get to, or before we save it for a webinar, we'll get to it then too. There was one good one. I think it's this one, right? Yeah. Adam, or do you have another one?
I just do that one. I just want to read other questions.
Yeah.
Let me just give you a chance.
Check them out. Mason, your question on BTAI, go ahead and watch this morning's pre-market prep, or Good Morning NASDAQ. We kind of talk about BTAI and how we really don't like it. It did go higher today, so it is technically more extended, but it really fits the theme of what's been going on in the market, where there's a lot of runners, but none of it's really ideal. And so for those reasons, I'm going to be a little bit pickier and avoid the less ideal kind of runners and plays.
You can go on.
Yeah, I like that one. Logan asks, at what points in your career did you either of you come into a studying plateau? I'm not sure exactly what you mean by study plateau. If that means more of like time-based plateau where you just couldn't study more than 3 hours a day and you just got tired, or you maybe have felt like you've studied a lot or all of the material and you don't know what else to study. For either or, I mean, if you for whatever reason you lose fatigue or you just kind of tap out after 3 hours or however many hours a day you have, that's how many hours days you have. Period. Like I've always valued quality over quantity, and the biggest mistake I see a lot of traders make is that they will, in the name of being a good student, they'll say, "I studied for 7 hours yesterday and I didn't remember half of it." Right? It's much better to have something consistent that you can stick with over time, and then actually retain that information, right? The last thing I think you want to do is try to study 10 plus hours a day, which again could be good and could be beneficial for very short spurts, but doing it too long, I think if you end up forgetting all of it, then what's the point, right? You want to be able to actually have quality studying and quality learning to then be able to use it in actual real world trading. If it's the other thing where it's like you felt like you've studied everything and still aren't getting anywhere, I would tell you to, and you're not going to like this answer, you haven't studied everything. I almost promise you. Like, I had a viewpoint when I was studying of like, if I'm not where I want to be, it's because I haven't studied enough. And if I wasn't, and if I felt like that, like, well, I've already watched all this, I've already watched that, I watch it again. I find something else. Like between all of the guides that are out there that you can learn from, all of the podcasts, all of the YouTube videos, all of the books, there is thousands of hours, thousands. And to think that any one human being can really get through it all that's out there, I would argue it's almost physically impossible. There is an endless supply of information out there, some of which will never be touched, and some of which will be watched 2, 3, 4, 5 times. Like how many times have you watched Trade Tickers too?
57.
Yeah, like dozens of times, right?
Like more.
And beyond that, even if it's not the same material, it's studying in a different way. Like, and maybe you mean a plateau of like when did maybe we stop studying? Like after like 4 years in, I kind of got the gist of how much and where and how much to study, to the point where it turned in not so much of watching podcasts or guides or videos. The studying became reflecting on me and just refining my own process. Like there definitely was a shift from learning from others to then refining myself. And again, learning from others still happens, but it was tilted to one way of just refining what I'm doing that works. So anyways, I could go on forever on this, but that's kind of my viewpoints on your possible questions.
Yeah. I got 2 things to say, and then we're going to shut down Wine Wednesday for the evening, and we'll see you all for Good Morning NASDAQ tomorrow.
I'll be there. I'll hold it down myself. I think it's going to be me.
We'll be Kyle.
We'll do it.
I'll be flying into San Francisco. But as far as Logan's question goes, at what points in your career did either of you guys come across a studying plateau? What did you do? There was a moment in my career, and I think Kyle just said it, so I'm not going to try to reiterate it, but I was just studying just to say that I was studying, and there was like a very specific shift that happened where I said, okay, I'm not just going to watch video lessons just to watch video lessons. I'm going to watch very specific video lessons that would actually help me out the next day. So then my studying became, this is exactly what I did when I plateaued. My studying became to rewatch everything that I've already studied, categorize them all by which pattern fit which webinar. And then if that pattern was there the next day, I would watch the game footage the night before of that pattern play out previously. And because I had it all compartmentalized, I was able to revert back to that exact video. Okay, I have an overextended gap down tomorrow. I'm watching Grittani trading overextended gap down, whether in trading tickers or one of his thousands of webinars at the time. And I would like refresh that exact play in my mind. And that studying was only like a 30-minute to 1 hour type video. And it was very specific and pointed to what I wanted to do tomorrow. Take some notes tomorrow, notes in front of me, trade plan in front of me. Let's take some action, right? And that's where I actually became profitable. And then that kind of leads me on to the last question of the day. It's not really a question. John Linden says, to be honest, part-time trading is the way to go anyway, especially in small caps where you especially now don't need to trade every day. And there was also a day where I had a realization where there were days, especially as a short seller, it's easier to do this as a short seller, where the night before when you're making a watch list, you know for damn sure if there's an A+ setup coming the next day, or if there's a setup that could have your interest, right? Maybe a stock is like halfway, up towards a resistance level that matters, whatever it is, or it's 3 green days in a row, right? You know that the trade is there tomorrow and that you have to trade. And there are a lot of days where that's not necessarily there. And I started to realize like there are days that I needed to watch the market, and there were days where college came first and I could avoid that stuff. And it's, again, just knowing your setup, but it is true in small cap and it's true to this day, right? Like you can see good plays from a mile away, and whether you lose or win, like those are the ones to take on.
Brilliant. All right, everybody. Thanks so much for tuning in. Glad you enjoyed this different aspect of us being in person. So we did this video in person versus Zoom. Wish Dom some happy deer hunting and Kellogg some happy time off. Yeah. And we will, again, I will be hosting Good Morning NASDAQ tomorrow at 8:45 a.m. Without further ado, peace, everybody. Have a good night.